Hello, everyone. Equity market is seeing a phenomenal growth. In 2023, we had one of the best years for equity markets. And when you have such a phenomenal return in equity, it's but natural for investors to be confused. It's but natural for investors to have many questions in the mind, questions related to whether market is expensive, whether market is extremely overvalued and in a bubble zone, whether they should be doing profit booking, whether they should be putting fresh money. It's a very challenging time. And even from an advisor perspective, it's one of the most challenging period. The reason being, at one level, you have market being extremely overvalued, but at the same time, you're bullish on the Indian story, you're bullish on the markets, and you feel that in the years, markets are going to go in a very stronger mode. So it's a very tough period. But in this video, I'm going to solve all these questions for you, and I'm going to give you some interesting solutions which you can use in your portfolio or investment management. Now, before I answer all these questions, let me take you through what happened in the year 2023. Now, in the year 2023, the large caps gave a return of around 20%. The mid cap gave a return of around 45%. The small cap gave a return of around 55%. The big daddy were the micro caps, where the return came around 65 to 70%. Now, when the markets have run so much, it's but natural for the markets to be expensive. If you ask me, from an overall perspective, we feel the broader market is overvalued by around 20%. The large caps are still cheaper because they have not run so much, so they are only overvalued by around 15%. But the mid and small, they are overvalued by around 30%. And it's but natural for markets, especially in the mid and small, to be expensive because they have run up a lot in the last year. So what should investors be doing? Now, if you look at a valuation purpose, markets are clearly expensive. If investor has any requirement of funds in next 1 year, 2 year, 3 year, then it's a very good time to do profit booking and put the money in debt and safe investments and use it when the expense comes up, because market is not always reliable in short term. There could be a situation that markets are down when you need the money. But if your time horizon is long, then of course we have to think. Now, if you ask me, I feel that we are in a structural bull market rally, and there are 2 3 reasons for that. Let me explain you why we are so bullish on the markets. The first important point is that in US, it is expected that the Fed is going to cut the rates this year somewhere around March or April. In US, the inflation, the CPI had gone to around 9.1%, and it has now cooled down to around 3.2%. The objective, the challenge which was with the inflation has already come down. And with the inflation being down, it's expected that the Fed will be cutting the rates. And normally what we have seen is that when interest rates in US goes up, foreign investors or FIs take the money to US because they're getting almost 5.5% in dollar terms in the deposit. When they're getting 5.5% in deposits in USD, then why would they be taking risk in emerging markets? So accordingly, what has happened is that if you look at the global money market instruments, which invest in short-term bonds and other money papers on a fixed rate, the overall corpus has gone up from around $5 trillion to $8 trillion. So it is expected that the rate cut which happens next year, in this year, then the FI flows is going to come to the emerging markets and other emerging markets, and especially the Indian market, which is expected to be a big beneficiary. So this is one reason we expect foreign investors to come to Indian market in a big way. And this is also visible because large cap counters which are driven by FIs are still yet to move in a big way. If you look at the stocks like Reliance Industries, HDFC Bank, Kotak Bank, they've really not gone up because these stocks are driven by FI flows. So this year when FIs comes in, these large cap stocks are expected to definitely do better. Second, what is expected is that the domestic flows have been very strong. We're getting a monthly SIP investors from domestic mutual fund investors of 17,700 crore on a monthly basis. And this continues to goes up. Last 1.5 years when globally everything was down, the domestic flows continue to be strong, which did not let the Indian market fall. And now when they've seen the returns, we expect the domestic mutual fund SIPs to get even bigger. So I think the domestic flow story, which is from the mutual fund, SIP, provident fund, insurance, NPS, is going to continue. Third important fact is that last year from 1st April, government has introduced a tax on your debt mutual funds, international mutual funds. They're fully taxable now. Earlier they had a better taxation, lower taxation. Because of higher taxation, Indian investors are preferring to put more money in Indian equities. And that's also the reason we are seeing so much of flows. So if we look at this situation, we feel that market is in an early bull run, early bubble. It's a bubble. It's clearly a bubble. And this bubble is expected to become bigger in the coming years. So we expect markets to double even from here in next 4 5 years. But yes, when something is so expensive, investors have to be comfortable. All the returns are not going to come easily. It's not going to be a one-way journey. There will be a volatility. One needs to book profit, especially when market goes up. And one should also be ready that there will be short-term corrections as well. So this is the outlook. Take actions on your portfolio accordingly and stay positive on the Indian economy. We are very bullish on the markets and we are hoping to see a fantastic year in 2024. Thank you.